Hello, it's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the website and certainly learn more about the products and services on offer, www.cfds.com. Alternatively, visit the educational site, which is www.cfds.education, to certainly learn more. Okay, a summary of today's price action and events thus far in Europe. Now, let's start with the Asian markets overnight. The lack of follow through so far is my main concern. Okay, which gets me basically more or less convinces me to start to enter into the bearish camp. I've switched buys a few times, as subscribers will know, this morning, and initially I was bullish, and now I'm starting to turn bearish, and certainly I am entrenched in the bearish camp, and I'll explain why. Okay, let's explain the Asian markets first of all. The Asian markets, Hang Seng overnight minus 140 points, minus 0.6%. So that's not exactly bullish. It certainly doesn't give you comfort or basically reassurance. We had the Shanghai up 57 points, 1.6%, and the Nikkei up almost 2%. Now, a lot of these moves really are already factored in, given the fact that obviously the futures, equity futures, were obviously higher post NFP. So no real continue and follow through either. Now, if I bring up the actual Asian market indices and show you the actual technical position at present, the Nikkei itself, yes, we've closed the gap and we've certainly pushed higher. Now, there is an unfilled gap again at 20,000. That certainly needs to close. But the question we need to ask ourselves is this rally going to be sustained? That's the question we need to ask ourselves. Now, also with regards to Shanghai, we've started to come into a diagonal trendline resistance. We're fast approaching the 200 MA, and we're into that fib 75% retrace. So again, the question needs to be asked: can it sustain itself, or has everything been baked into the cake? Okay, and that's the question that we should all constantly be asking ourselves. Now, overnight, or should we say over the weekend, the Asian markets basically were under pressure due to the weakness in terms of Chinese data. We had weak imports, weak exports, and certainly global growth concerns revived again, given the fact that especially for European exports and US exports, the Chinese imports slumped quite substantially again. Okay, we also had a CBI downgrade, so the CBI downgraded UK growth to 2.4%. We have concerns with regards to BHP and the mining disaster in Brazil, concerns over the loan in Greece. That certainly seems to be dictating sentiment in European stocks this morning. Also, given the fact that we've had the Euro USD certainly start to rise, and that certainly has hurt sentiment. We've had Mr. Evans hawkish over the weekend, further hawkish comments. Tata Motors lost, Volkswagen concerns, obviously Volkswagen being sued, so that certainly is a concern, that certainly remains. And obviously the dollar strength on Friday, I mean, that certainly is the overriding bearish factor, given the fact that we are going to hike rates in December. So can markets sustain that move, or can they actually manage that move, and can they withstand that move? So that certainly is a question again. So there are a number of bearish factors. Now, we did have concerns over Lonmin, but they were alleviated given the fact that they've done a rights issue and the shares are up by 11%. We've had Eurozone Centix investor confidence better than expected. We've had stronger German data this morning, so that certainly has helped sentiment to a large extent. We've had Hiscox better earnings, and obviously Nikkei and Shanghai positive, but yet still we've failed to follow through. Now, as I speak at present, European stocks right now, the FTSE is actually negative 5 points, the DAX is negative 40 points, the CAC is negative 25 points. That's not exactly reassuring. The equity futures, US equity futures, certainly are pointing or indicating negative as well. So certainly a lack of follow through. So any lack of follow through based after bullish news is not exactly a good sign. Always remember that, folks. It's a very bearish sign. So that's not exactly something that we want to see, and that generally does indicate a potential top if no other news flow or any bullish news flow fails to make new highs on the market. So again, one needs to exercise caution. Okay, now let's start by looking at the technical picture now from the European market. So let's start with the bellwether in Europe, which is a German DAX. So let's just bring that up. Okay, now the daily chart, previous resistance equals support, and the 200 MA certainly seems to hold. This diagonal trendline resistance certainly is holding as well. We have an unfilled gap on the DAX at 11,300. Given the fact that we've had the euro being absolutely butchered post NFP, that was the catalyst potentially for making a new high to 11,300. Also, given the fact that we've had German data, the stronger German data this morning as well, that has failed to send the actual German DAX higher again. So I mean, I did actually go long this morning in European stocks, expecting the German data certainly to propel the market higher, adding the weaker, obviously, adding the weaker euro, given the fact that the German exports came in at 2.6%, expected was 2%. So certainly impressive data there, okay, and I expected that gap to close, and that unfortunately failed to materialize. So you have to respect price action when a move like that occurs, when you have strong bullish data, but yet the market fails to move higher. Now we've obviously consolidated ever since. We've put in a topping tail here on the German DAX, and we're consolidating out that breakout of the symmetrical wedge pattern that we had. Okay, so again, it's certainly a cause for concern, given the fact that the reason why I say cause for concern is the fact that bear with me. Let me just see what's happened here. Oops, right. 1 second. I just need to go in and organize my templates, template options, trading options, template options, main window. Here we go. I don't need this. I need this. I don't need this. I don't need this. I don't need this. I don't need this. Don't need this. Don't need this. Don't need this. Yeah, configure object. Copy object, move object. Yeah, I don't need this. Don't need any of these. Actually, I can do with that. Okay, so apply to all templates and done. Okay, I'm not sure why that's been changed. Okay, so that's been resolved now. Okay, so basically. Given the fact that you can see here you have a topping tail, German DAX failing. Now we've actually failed to hold the previous resistance equals support on the German DAX, which is it's not exactly a bullish sign. Okay, certainly is indicating bearishness from my perspective, and we certainly are falling. I thought we would consolidate here and obviously break out, given the fact that we made a new high. So it certainly seems to be more of a fake out rather than a breakout. The 10-minute chart on the German DAX itself, as you can see here, no real sustained movement higher. Okay, we seem to be hugging on this trend line here, or potential support here. Okay, here, and again, no real movement higher. You can call this a downward sloping, contracting wedge, whatever you want to call it. Basically, it basically indicates that you are holding support, but you're not making lower lows. Okay, but this market remains vulnerable. I mean, you could be building a base here on the German DAX at 10,940 for a propulsion higher. That certainly is the case. But given the fact that we've had concerns over Greece this morning dominating, okay, and certainly that, and given the fact that we've had weaker Chinese data too, okay, so again, all of those factors are adding in and certainly indicating bearish price action on the German DAX, so certainly a concern. Now let's cross-verify that with the French CAC and see exactly where the French CAC is trading to see whether or not that is strength or weakness. So if the French CAC is attempting to certainly move higher, let me just bring up the correct EU indices, European, here we go. Alright, let's just bring up the CAC itself. Now before I go into the CAC, actually, just need to make you aware that the MDAX itself is certainly weak too. Okay, as you can see on the MDAX, the daily chart certainly weak, the 60-minute chart certainly weak, failing to make new highs. The tech all share certainly is indicating resistance, and the 60-minute chart again is indicating resistance, no real movement higher. So again, that certainly is indicating their potential move lower. Now going over to the actual CAC itself, okay, CAC 40 again, lower lows, lower highs thus far. On the 10-minute chart, daily chart, you can see ever since we've closed that gap, we're holding that resistance. There is an unfilled gap above, but yet at present indicating weakness. Now the 10-minute chart, again, you can see lower lows, lower highs, and we certainly seem to be making a downward sloping contracting wedge pattern. 60-minute chart, we put in a triple top or a double top, call it what you want. Basically the fact that we've failed to make new highs again is not exactly a bullish signal, is indicating weakness. Even with a weak euro, the euro stocks and the CAC and the DAX are certainly languishing and lagging behind. Not exactly very reassuring, folks. Okay, not exactly very reassuring, and it's a cause for concern, okay, from my perspective. Okay, now CAC mid 60 again. You can see a bearish candle here ever since we've close this gap here and previous resistance, previous support equals resistance here, we fail to really move higher at all. Okay, now the CAC mid and small, again bearish engulfing candle, failing to really propel higher given the fact that we've closed this gap here. Okay, and obviously previous support equals resistance, and we fail to move higher. So these are all bearish factors, all of them are bearish factors. Now going to the Euro stocks, let's bring up the chart of the Euro stocks. Looking at the daily chart on the Euro stocks, you can see that we're holding at 200 MA, we're failing to propel higher. So again, a bearish factor. 60-minute chart, even with, again, remember, even with the weaker euro, we're failing. I did expect a bull flag to new highs, and that has not occurred. So therefore, we're holding resistance, and it certainly does indicate exhaustion. Even with a weaker euro, we're failing to propel higher. Remember, post NFP, a weaker euro sent European equities higher. That's not the case this morning, unfortunately. That's the reason why I actually went long in the morning at 3474, average of 3472, and still I'm stuck with my long position, currently minus 20 as I speak, or minus 18 as I speak. So this is not exactly a good sign. Okay, again, worrying sign, cause for concern, potential exhaustion, even given the fact that Asian markets were higher to a large extent, US markets were higher, but yet European stocks are not following through, and that is indicating weakness, a risk-off scenario. Okay. Euro stocks again, so the FTSE 100, the last chart really, if I look at this market at present, even with the news from Lonmin and the 10 or 11% rally, BHP and the rest of the sector certainly is forcing the FTSE down, as you can see in the daily chart, indicating resistance potential. Next support is 6320 and potentially lower, down to 6250. Then obviously you got 6270 as well. Going to the 60-minute chart, I think I've already documented this, the H&S formation. We obviously retested the neckline, held that neckline, and ever since then we've seen weakness. So even with the Shanghai up 1.6%, the FTSE still has failed to rally. So again, that's not exactly a good sign, okay? Indicating a risk-off scenario with a target of 6260 on the H&S formation. Obviously, the stronger dollar is hurting commodities, even though the oil price and the copper price certainly seem to have stabilized. And obviously growth from China, etc., or lack of growth from China, which generally equates with more stimulus, that trade certainly is not working. Okay, so the stimulus trade on commodities certainly has failed to materialize to a large extent. So the FTSE 100 10-minute chart, we've made new lows, and indicating potential further new lows down to the 6335 region on the FTSE itself. But all eyes remain on the H&S formation, and that really is the more overtly bearish pattern in the whole of Europe, which will send, or more than likely send, all European stocks lower as well. Okay, so again, not exactly a positive sign. Okay, all indicating weakness and bearish price action from my perspective. Okay, so again, all eyes on the German DAX as well, given the fact that we're holding that previous support equals resistance at 200 MA on the daily chart, and the 10-minute chart itself is building a base at this 10,940 level. If you crack that 10,940, we move lower with quite some pace. If we manage to hold this, then you are looking at a potential short squeeze. Now, one of the biggest variables that everybody should be looking at right now is not just the S&P 500, given the fact that we're in a bearish channel or bearish price action with lower lows, lower highs, and a 60-minute chart. The daily chart has broken out, okay, out of that rising, contracting wedge pattern. And also the Nasdaq as well. That's a very important factor, because if the Nasdaq stays below 46.95, which I've told subscribers this morning, we are risk off. If it goes above, then obviously you're back into risk on mode. Given the fact that the weakness in Chinese imports, that really is or should be the overriding bearish factor. And I did expect the markets to flush overnight, and they failed to materialize. Again, we shall see exactly how the markets trade. Price action is king, folks. I can only trade what I see, and that's what I'm seeing at present. But as we all know, sentiment and bias can shift very quickly, and my analysis can be invalidated very quickly as well. Okay, so I'm just trading what I see. From what I understand here, you're certainly seeing weakness coming in because you have rising volume on the sell candle side, or equal volume to the buy volume, and potential increase on Friday. So from my perspective, the S&P 500 should, in theory, lead the markets lower, given the fact that you are making lower highs. Okay, and stronger dollar concerns dominate. Okay, and that should obviously hurt commodities and hurt risk sentiment, especially given the fact that Chinese imports are obviously on the decline. Okay, so I'm not sure how US equity markets can actually sustain the rally without the strength from China. Okay, and given the fact that QE is certainly not part of the equation, and we are talking about rate hikes as well, everything certainly indicates a bearish price action from my perspective. Either way, this is a conclusion now of the European markets. Wish you a prosperous trading session. I'll do a afternoon or evening market wrap up as well, explaining exactly how the market's traded. We have, in terms of economic data on the docket now, Euro stocks, European Centix investor confidence, obviously that's come out. The industrial production data certainly has come out too. We have the OECD economic outlook coming out shortly, I think, or it's already out. From the US market, not really nothing much other than the Rosenberg speech. That really will be interesting to hear what he has to say post NFP, and labour market conditions coming out at 3 p.m. as well. Okay, trade safe. Goodbye.